Good day, everybody. It's Trent Klarenbach with Klarenbach Research. Today is Wednesday, May the 22nd, and we are here with our grain market update. The first chart we'll look at is the corn futures chart. We can see here in the corn futures that they are finding resistance from the 200-day moving average. The 200-day moving average is represented by this purple line here. We can see that we are trading below that at the moment, and we really need it to get above the 200-day moving average before we can become bullish. Now, the good sign is the 200-day moving average is starting to flatten out, which is a good sign of perhaps we get a trend change. Now, I see a little left shoulder head and right shoulder forming here, so we'll see if we break this neckline. Maybe the price goes down to 440, or down to this 440 level. We'll see what happens there. Chicago wheat, it's trading at 691 at the moment. It's finding, resistance again from that $7 a bushel level. And we have a nasty wick on today's candle here. You can see this long wick, and it's not a good sign for today or the rest of the week, but we'll stay tuned. One day does not make a trend change. Kansas City wheat, same thing here, finding resistance from the $7 level. And, it's going to continue probably to consolidate a little bit. Maybe we get a pullback. We'll see what happens. The longer it stays up here towards the $7 level, the more optimistic we do become. Soybeans continue to trade between the purple 200-day and the green 50-day moving averages, not really giving us a sign of which way the trend will go, other than it's likely to go sideways for the near future as these moving averages move closer together. At some point, the price will break out or below, but until then, we really want to sit here and just sit on our hands and watch this price action play out. Now, soybean oil futures here are, they're again finding resistance from the green 50-day moving average. Now, the good sign is it's come off the lows, so perhaps maybe this is a sign of a trend change on the daily chart. It's too early to make that prediction yet or to get bullish, but we will keep an eye on it. We're looking at, this is the July mini wheat. We're finding that, that 750 range still acts as resistance. And again, we have a nasty long wick on today's candlestick also. The November, December contract is again, finding resistance from that 770 level. And, we'll see, probably take some more time to consolidate here. And before it has a chance to move higher, maybe we go back and test that 750 level. Looks like it wants to do that, as it's trading at 757 at the moment. July canola, it's finding resistance, continued resistance from the 670 level. And, we will see how this plays out. This is the third time it's testing it. The more times it tests its resistance, the weaker it becomes. So let's see if we can get a push higher on there. November, just making new highs at 690. So there's a lot of previous supply here to the left that needs to work through before we have a chance to break higher. Let's just see what happens. In the meantime, you can check us out at klarenbach.ca. And you can sign up to our newsletters, the Klarenbach Grain Report and the Klarenbach Special Crop Report. Today's going to be a great day. Life is good. We'll see you later.